Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2026, February 12th, and we're doing 4 stories in 6 minutes. IPOs in emerging markets, oil risk, Bitcoin targets, and the mood in markets.
6 minutes? Perfect. That's exactly how long my investing attention span lasts before I start researching snacks. Let's make me smarter than my group chat.
Story 1. Pakistan International Airlines' new owners say they plan to list the carrier within a year of taking over operations. In plain English, they're signaling confidence that capital markets will fund a turnaround story.
An airline turnaround? That's like saying, I'm going to fix my sleep schedule while holding a triple espresso at midnight. Why would investors buy that?
Because IPOs aren't just about good companies. They're about timing and narrative. It's basically like selling a house. You stage it, you show a plan, and you hope buyers show up before the roof inspection becomes a headline.
So the prospectus is the scented candle of finance. Got it. For regular people, what's the actionable takeaway? Do we buy airline stocks or just buy noise-canceling headphones?
Actionable takeaway. Treat this as a read on risk appetite in emerging markets. If more deals like this come, it can lift sentiment for EM funds and frontier market exposure. But for individuals, the safer move is watching your diversified allocation, not chasing a single turnaround airline story.
Okay, speaking of risk appetite, Brazil. I saw the phrase end to IPO hiatus and my brain went, nature is healing. Then it said bumpy comeback and I went, nature is tripping. What happened?
A pair of Brazilian fintech rivals listed in the U.S., helping reopen Brazil's IPO window, but the reception was uneven, highlighting fragile demand. Translation: investors will buy growth, but only at a price that compensates them for uncertainty.
So the market is like, yes, I'll date you, but I'm not paying for dinner. How do we explain this fragile demand without sounding like we live inside a Bloomberg terminal?
Imagine a neighborhood garage sale after a storm. People still want bargains, but they're checking every item for water damage. In IPO terms, that's higher required returns. Investors demand lower valuations, stronger balance sheets, and clearer paths to profit.
Actionable for normal humans. If IPOs are shaky, does that change what we do with our own money this week?
Yes, it's a reminder to separate exciting from compensated. If you invest in new listings, size it small and assume volatility. For most people, keep core exposure in broad funds. And if you want growth, prefer profitable or cash-generating companies over pure story stocks.
Let's talk oil. The headline vibe was, prices are slipping, but everyone's still staring at Iran like it's the season finale. What's the setup?
Oil has been flipping between small gains and losses, with traders focused on tensions between the U.S. and Iran that could affect Iranian output. Even when supply looks like it's swelling elsewhere, the market keeps a risk premium in the price for disruption.
Risk premium is basically the emotional support fee markets charge when the world is messy. For regular people, does this hit gas prices, groceries, or my random delivery fees?
Potentially, yes. Energy filters into transportation and logistics, but the key is direction and persistence. One-day oil moves don't always translate immediately. Actionable? If you're budgeting, treat energy as a volatility line item. If you're investing, avoid over-concentrating in energy unless you can stomach headline-driven swings.
Now, crypto. Standard Chartered slashed its 2026 Bitcoin target by 33% and warned it could hit $50,000 before recovering. That's not a forecast, that's a weather alert.
Right. The news is the revision itself. When a major bank cuts a target twice in a short period, it reflects shifting assumptions, liquidity, risk appetite, and how quickly new buyers show up when price dips.
So what do listeners do? Panic sell? Diamond hands? Or just stop checking price at red lights?
Actionable. Decide your rules before volatility decides for you. If crypto is in your plan, size it like a high volatility asset, small enough that a drawdown doesn't change your life. And if you're adding, consider time-based averaging instead of trying to nail the exact bottom at $50,000 or any other round number.
Today's theme is markets are open for business, but they're charging cover. IPOs want perfect lighting. Oil has geopolitical jump scares, and Bitcoin just got a fresh handle with care sticker.
Quick recap. An airline IPO plan signals emerging market risk appetite. Brazil's fintech IPOs show demand is still fragile. Oil is trading with disruption risk in mind, and Bitcoin forecasts are being marked down, so focus on sizing, diversification, and rules. Subscribe for your daily briefing and leave a comment with the one number you're watching most this week: oil, IPOs, or Bitcoin.